This is an Uncovered Japan Company research report on MarkLines, ticker 3901. MarkLines runs a subscription data platform used across the global automotive industry. Its core economics are exceptional, but one stalled year has turned a former growth stock into a deep value debate. The investment snapshot is unusual. The report puts MarkLines at about 9.9 times forward earnings, with a 4.5% dividend yield. The core information platform still earns a 49.6% operating margin. Return on equity is 23.3%, and the balance sheet carries roughly 3.8 billion yen of net cash. What customers buy is simple to understand. MarkLines gathers global automotive production, sales, supplier, parts, and technology information, structures it into a searchable database, and serves it in Japanese, English, and Chinese. More than 5,600 companies subscribe, while the wider registered user base exceeds 500,000 people. The segment chart reveals the real company. The information platform is 69% of group sales and produces essentially all of the profit, at a margin close to 50%. Promotion and teardown data are small profitable extensions. Consulting, procurement, recruiting, and vehicle measurement are far weaker, and some are loss-making. From fiscal 2021 through 2024, revenue and operating profit compounded in the low to mid-teens. Then fiscal 2025 hit a wall. Revenue was almost flat, and operating profit fell 5.4%, the first operating decline in the company's listed history. The crucial question is whether this is cyclical or structural. The balance sheet remains a major strength. The equity ratio is about 74%. The company is effectively debt-free, and return on equity has stayed above 23%. Even as growth stalled, the platform continued to generate cash at a level many software businesses would envy. Free cash flow turned negative in fiscal 2025, but the headline needs context. Operating cash flow actually increased to about 1.8 billion yen. The negative free cash flow number mainly reflects heavy investing and shareholder returns, rather than deterioration in the platform's cash economics. The moat has 4 layers. More than 20 years of structured data are expensive to recreate. Members contribute information that makes the platform more useful. Trilingual delivery lets global teams work from the same source. And annual subscriptions become embedded in procurement, planning, and research workflows. The moat appears intact. The issue is its growth rate. Management has several growth levers. It can add new data domains around batteries, semiconductors, and software-defined vehicles, use modest pricing on a sticky product, expand further in China, India, and adjacent industries, and build higher-value AI analytics on top of proprietary data. AI is also a threat if it lowers the cost of competing information, so execution matters. Valuation is the source of the asymmetry. The report places the forward price-to-earnings ratio near 9.9 times, below the bottom of the stock's historical range. A business with a near 50% core margin, net cash, and strong returns is being priced as though meaningful growth is over. That may be correct, but it sets a low bar. The author's 3-year scenarios range from roughly 8% downside in the bear case to 69% upside in the base case and 173% in the bull case. These are not targets. They illustrate how strongly the outcome depends on one observable variable: quarterly revenue growth in the information platform. The MarkLines score is 12 out of 20, growth 3, value 4, macro fit 3, and supply demand 2. The quality case is strong, a deep data moat, roughly 50% core margins, net cash, and disciplined shareholder returns. The risk is that the growth stall proves structural. Watch core platform revenue growth, side business losses, and whether management can deliver its recovery plan. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.